Welcome to the Saturday market update, May 24th, 2025. U.S. stock market recap, we're going to start with that. And for those of you that know, the U.S. equities experienced a downturn this week, just a little bit, primarily influenced by renewed trade tensions and rise of bond yields, which is no new story. S&P 500 did decline around 2.6% for the week, marking its steepest weekly loss since March. Dow Jones Industrial Average dropped 2.5, moving back into negative territory for the year. And then NASDAQ Composite fell by 2.5%, influenced by declines in major tech stocks. The market's decline was exacerbated by President Trump's announcement of potential 50% tariffs on the European Union imports and a 25% tariff on smartphones manufactured outside the U.S., targeting companies like Apple. Apple stock alone dropped around 3% on Friday, which contributed significantly to the market's overall decline. Russell 2000 also decreased by about 3.5%, which reflected the broader market concerns in general. Let's go ahead and talk about bond markets. Bond markets are the basis of the market. So when we talk about these, it's very important getting a good bond understanding, how that influences everything, interest rates. I'm just going to summarize what happened this week. Essentially, 30-year Treasury yield surged above 5%, reaching its highest level since 2023. The 10-year Treasury yield did increase to 4.5%, indicating investor apprehension about long-term fiscal stability. A lot of this is going to have to do with trade, the protectionism that we're seeing here in the United States and in other areas. So these yield increases were influenced by a recent U.S. credit rating downgrade by Moody's and concerned over a new tax bill potentially expanding the federal deficit. Sector performance-wise, though, among S&P 500 sectors, utilities experienced the smallest decline. They were less than 1%. Consumer defensives decreased by about 1.1%. Energy and real estate led the declines, reflecting sensitivity to some interest rate changes and economic uncertainty. And then notably, nuclear energy stocks bucked the trend, rallying after President Trump signed executive orders to boost the industry. This is not a surprise. For many folks have been waiting a few years for nuclear industry to continue to grow. We'll be seeing a lot more micro reactors if you've been reading anything on those. And those are essentially just going to give us the ability to continue energy production at home and give us a few options from pricing perspective. So cryptocurrency market update. This is a very exciting week. Bitcoin experienced a little bit of volatility this week, but barely any. May 22nd, for all of you that were out there, I saw the memes on X and everywhere else. BTC did reach an all-time high near 112,000. May 23rd, the price dropped below 109, but who cares? Because it hit over 109, which was the all-time high, and then it ended up closing on the 23rd around 108,885. So that was only about a 2% decline from the previous day, so we're still in great territory. A lot of folks are attributing the bit of pullback to the profit taking, and then obviously you have some market reactions to the geopolitical developments that are happening around the world, including tariff announcements, despite the dip on-chain indicators, as far as all of the analytics show that there's accumulation across wallet cohorts. And then, typically when folks are holding, that's going to suggest a bullish sentiment is still remaining in the market. Another item that I thought was very interesting that I did see in the news was that a few countries have shut their door to the U.S. as far as being able to have citizens actually live there. So we are seeing some geopolitical tensions happen around the world, but overall, I think it's going to play out over the next few months, obviously. If you look at China, you can see that they dropped a lot of their imports, which is probably going to start to influence U.S. farmers, and already has future pricing, all that type of stuff. We have imports on pork, soybeans that have just been dumped, beef that's been dumped, and then China is reporting that many of their other areas of industry are starting to pick up new consumers in other countries outside the United States. So that's going to be something that we will see more of. Outlook for the week ahead, May 26th. Actually, I want to stop real quick. May 25th. Today is the Indy 500, so if you guys are interested in that, it's very exciting. We got one driver up for a three-peat. We'll see if he actually wins for the third time. Outlook for this week ahead, May 26th to the 30th. Investors, should be looking toward these type of developments that are really going to impact everything. Trade tensions. There is a potential implementation of new tariffs, which could further impact global markets. We see that also from Europe, right? Economic data section, key indicators including GDP revisions and PCE inflation data is going to help us provide some insights into economic health. And then Federal Reserve signals. Comments from the Fed officials may offer us a few clues on monetary policy, especially in light of the rising yields and inflation concerns that there are. Tariffs are another type of tax, whether folks want to admit it or not. It is something that comes up from the bottom that affects everybody, but not as much typically always as it does at the top. With U.S. markets closed on Monday, May 26th for Memorial Day, we will also be closed as well. However, help desk and support will be available. Trading volumes might be lighter earlier in the week, but as you guys know, with Bitcoin, it's a 24/7 market. So some exciting things going there, and then we will see how things go into next week. Thank you for joining me today. Have a beautiful Memorial Day, and we will talk soon. Bye-bye.